Welcome in. I am the Crypto Bull God, and in today's video, what we're going to discuss is what is more likely. Will Quant hit $1,000 or $100 levels first? If you appreciate the content, make sure to give a thumbs up, drop a comment, and subscribe to the channel. By the way, you can find me on Twitter. You can find me on YouTube, Tradingview, and Instagram at CryptoBullGod. Just a quick disclosure that none of what I'm sharing is financial advice. I'm simply looking to educate and to help others. We're all big boys and big girls, and as such, we can make our own personal financial decisions, can't we? So with that being said, let's get into it. So the first chart we're going to take a look at on Quant here is a 2-week chart. I really like to kind of zoom out on the charts and take a macro perspective level to understand what's going on, and then we can get a little bit more granular and get into lower time frames. Now, what you have to understand when we're looking here, I want to understand market psychology. I want you to understand market psychology with me. As we were running up here, what was telling me that we would most likely top, you can see I have an area of resistance drawn between 226 and 262. Now, again, especially in volatile assets like this, it's important to keep in mind that I might have 262 drawn, someone else might have 261, right? So it's really regions of support and resistance. Keep that in mind. But I have the 226 and 262. What I was seeing on Twitter, and I did respond to a few people, I saw a lot of euphoria entering the market. I saw things being said like, Quant is going to flip Ethereum. Quant will never see a major correction again. These are delusional statements, okay? We have to understand, once we start seeing those signs within the market around a project, that's an indication that we're overheated and we could potentially see a correction at some point soon, okay? Now, one of the other things that was great about this project and that I was tweeting out a lot for the past really couple months was that Quant was front running the market, right? So during this movement up, you can see we're sort of in a falling channel here. I wouldn't say it's really a falling wedge, it's more like a falling channel. When we were in this falling channel here, once we broke out and started making movements up, a lot of the rest of the market was just going sideways, right? It really wasn't doing a lot. So it's not surprising right now as we are coming down, okay? As we are coming down, we've become overheated and we're correcting. A lot of other projects are now taking their turn and they're running. This is very common. So it wouldn't surprise me once we sort of base out here, okay, to once again see Quant running while some of the other projects are correcting. Crypto projects, the tokens, they take turns in running and correcting. This is something that if you're not familiar with it now, you will become very familiar as you become a little bit more seasoned within the market. But you can see right here, I have a couple major areas of support drawn here around $99 and $83. 100 is a psychological level. We pushed up here to this 226. Run your eyes across here. You can see anywhere I have an area of resistance or support, there's areas of price confluence with either candle bodies or price wicks. And when I look at this 2-week chart, what I'm seeing as major other areas of resistance, okay, above the 226, I see 262, I see 358, and I see our all-time high at 429. Now, what we can do is we can back off of the 2-week chart, and now we can get additional candlesticks. We can double the amount of candlesticks by putting this on a weekly time frame. That can get us a better understanding of even more areas of price confluence for resistance and support. So I have drawn 2 additional lines, and I have color-coded them so it's easy for you to see that. I've drawn an additional area of resistance here at about 318. And I drew additional area of support here around, looks like 155. Okay, so those are some additional areas of resistance and support I see on the Quant chart once I actually zoom in on a weekly chart. Now let's take a look at some of the price indicators here. So the RSI, it's at a very bullish level. You can see we sort of got overheated once we started getting up at this 71 level. If you actually scroll through and you look at a lot of the crypto projects, you'll see that on time frames, once we start on the relative strength index, the RSI, once the RSI starts getting into that 70 to 80 region, chances are we're going to see a pullback. Again, things can remain overextended for a period of time, and they can remain oversold for a period of time. But this is one indicator that could tell us that likely we were going to see a pullback. MACD looks very very healthy. It's above 0. The blue is above the orange, very, very healthy. Stochastic RSI looks fine. You know, we did see a cross down, the blue cross below the orange. If I kind of expand this a little, you can see we kind of dropped here. But again, you know, what I like to see on the stochastic RSI is that overall it's bullish because it's above 20, right? So price indicators are looking very favorable at the moment. Now, one other thing that I want to take a look here, two other things actually on the weekly view. I want to take a look at Fibonacci retracement levels. Now, it is very common, very, very, very common. When we top, what we can do is when we top out here, we can actually take a measured move from the top all the way to the bottom here, okay? And there's these Fibonacci sequences that are shown here. Most of these are sequences. I'll hit on one or two that are not true Fibonacci sequences. But really the ones that you want to focus on are the 0.618 and the 0.786. And this 0.702, that's not a Fibonacci sequence number. That's actually just the midpoint between 0.786 and 0.618. And why do I have that drawn? Well, the 0.618 is the golden Fibonacci level. Okay, this is an area where things like to retrace to and hit once they're done bottoming it out. And you can see that we went all the way up to this 0.618, but we actually went above it. Another key area is the 0.786. So the 0.702, this whole area right here, what I'm attempting to communicate to you is this 0.786 and 0.618. Once our top is reached and we bottom out down here and we sort of measure the Fibonacci numbers in here, this is a golden area that the number likes to ultimately rise back up to before we face resistance and then start moving back up, okay? And I think the nice thing about the 0.702, and I've seen a few people use this, and you can see there's areas of price confluence here. This is sort of the midpoint, right? So if you would expect something to top out once we have bottomed and we begin coming out, you could expect it somewhere around this midpoint of the 0.702. So not surprising to see that we have temporarily topped out at 226, right at between the 0.618 and the 0.786. Now let's take these Fibonacci retracement levels and let's expand upon this idea and let's take a look at where we might actually retrace to. And then what we'll do is we'll take this idea and then we'll go to a more granular level on a daily view to see additional areas of price confluence, to see if there's any price levels of support, to see if there's any confluence between the Fibonacci retracement levels here and also what we're seeing on the daily view to get additional areas of price support. Okay, so what I did here, this is very simple, okay? Let me explain this. Once we bottomed out here, if you feel that the move to the upside is done and we're going to see a little bit of a correction here before we start moving up, you can actually take the bottom, okay, bring it up to the top, okay, and you can kind of see where we might retrace to. Now, if you followed what I said earlier, okay, it's very possible, and I know Nick over at Encash Official has been out there tweeting that he's, you know, I don't want to put words in his mouth, but I think he is targeting as a potential pullback for Quant somewhere in the $60 to $70 area. Well, I mean, this sort of gives credibility to what he's saying, right? So if you look at the 0.618 here, okay, and you look at the 0.786, remember this pocket and the midpoint at 0.702 at 68, you're seeing values between, you know, we're going to call this $79 and $59, right? Between 79 and 59. Now keep in mind, okay, keep in mind, one scenario that would make this plausible, okay, while it's not my primary hypothesis, we'll get into it in the next chart. While this is not my primary hypothesis, this is certainly very possible. Let me explain to you a potential scenario that could play out that would make this possible. As Quant is sort of stagnating here and we've temporarily topped out, right? Other cryptos, okay, other crypto projects, Bitcoin, Ethereum, and other altcoins, they could start running. And once they're done running and they see a correction, Quant could correct with the rest of the market to come down around these levels before, again, it starts moving up, okay? It's moving up as the rest of the market is correcting, and it starts once again front-running the market just like it did here. That would be very healthy. The other thing that would be very healthy about that, check this out. If you've been here for a while, you tell me, speak for me as I'm saying this. Answer this question as I'm speaking. What would happen if we did this? this low, this high, and say we hit right around 0.618 at like $79, $75. What would this be? Well, these would be the basic building blocks of a bullish narrative, right? Because we have two lows. Now we're just waiting for the higher high to come in, right? Now we're waiting for price, okay? Now we're waiting for price to explode up past this high, right? Come up in this area and most likely create a new all-time high, right? Now we have two higher highs and two higher lows. Those are the basic building blocks of a bullish narrative. But again, if you're getting emotional with your investment, okay, I'll tell you exactly how you can tell if you're getting emotional with your investment. We've all been there, okay? We've all been there. So it's just important to learn from your mistakes. I've made plenty of mistakes in my investing and trading career, okay? And I will continue to do so, but it's important that I learn from it, and it's important that you do as well. If you appreciate the content, by the way, click the thumbs up button. Drop me a comment, and I appreciate engaging with everyone. It's important that you learn from it, but you know the way that you've become emotional. If you've become emotional with your investment, what you weren't doing is you weren't buying in this area. You weren't buying in any of this area down here. You started buying up here because you thought Quant would never have a major correction and Quant was going to flip Ethereum in the next several months, okay? I'm not here to tell you what's going to happen 10 years from now. I'm here to tell you what is probabilistic to happen and not happen in the immediate future. That's what I'm here for. I'm not here to tell you Quant's going to flip Ethereum in 10 years or HBAR is going to flip any project in the next 10 years. That's not what I'm here for. We can all have fun and have those conversations, but that's not what I'm here to talk to you about in these TA videos. So again, this sort of validates that we could see a retracement down to this maybe $80 to $60 level, okay? Now, keeping the $80 roughly to $60 level in mind, let's go to a more lower time frame chart, okay? Now, what I tried to focus on in this chart, there's a lot of green lines, okay? And there's a golden pocket. I'll explain this very clearly for you all in a moment here. What I tried to focus on in this daily chart is because, again, now we've taken a weekly view and we've multiplied the number of candlesticks we have by 7, right? We're taking a weekly and turning it into a daily. Hopefully you know that there's 7 days in a week. If you don't know that there's 7 days in a week, you might want to flip off this channel and do a little bit of elementary school learning. But anyway, so now what we've done is we have more candlesticks. And if we have more candlesticks, we have a greater opportunity to see where there's levels of price confluence to draw further lines of support, right? Just look at this chart. We have a lot of thick candle bodies here, not a lot of wicks. It's really hard to draw a ton of areas of resistance to support, right? If you come over here, look at all this history, there's a lot more opportunity to draw areas of support, right? So I'm not focusing on resistance, I'm focusing on support. So let's take a look at areas I think could provide support here, okay? I have 147 drawn out, 129, and the numbers are right here, by the way, that I'm reading off. 147, 129, 113, 99, 88, 73, and 65. Well, son of a bitch. If we look at 65 to 88 as an area of price confluence and come back over here, that roughly lines up with the 0.618 to the 0.786, right? This is 80 to 60. And I just said there's a major area of support between 88 and 65. So it's roughly in the same area, right? Now, what I've done is for myself, okay, if I was looking, and again, never financial advice, but if I was looking to scale it back into this project and get more, or maybe I'm not even in the project and I want to accumulate some, right? What I would look for is this golden pocket. And depending how you want to scale into this project and depending how much you would want to put into the golden pocket or wait down here, this depends on how risk averse you are, right? Your investment philosophy. So maybe you put, if you're really like aggressive, maybe you'd put half in at like 113, right? Or if you were super conservative, maybe you'd put 10% of what you'd want to put in at 113. But I have an area drawn between 113 and 88. For me personally, if I want more quant, I'm waiting for 113 to 88, and I will base how much I want to allocate in, like a third here, a quarter here, based on my own. It's subjective, based on my own investment strategy, okay, and how risk adverse I am. Now, there is another, obviously something I spoke to, there's another area of support all down here, okay? And you need to decide how much, capital you want to be willing to hold aside to wait for prices to potentially come that low. But for me personally, my main golden area, my main golden pocket is between 113 and 88. And I would be much more aggressive between the $99 and 88 level, okay? Not saying we can't wick below there and go into the 70s and 60s. That's just speaking for me personally. So I hope that you found this content helpful. I hope that it leaves you feeling better prepared in terms of what to anticipate next. To answer the question specifically, okay, the title of the video, what do I believe is most probable for Quant to hit the $1,000 level or the $100 level first as a next step? I think it is more probable that we're going to see a pullback to the $100 level. Okay, when I say $100 level, it could be 90, 80, 70, but something, $100 or south, I see, prices continuing to consolidate. And again, it's very healthy. It's very healthy. Prices to come down here and just consolidate before coming up and creating new all-time highs. So the answer to the question of the thumbnail, I think it is more probable that Quant will see the $100 level first before going into new all-time highs. Something else that we'll do for fun real quick, just as a bonus. I wasn't planning on doing this originally, but what the hell. What we're going to actually do for fun is we're going to look at potential price areas that Quant could hit once. And if you've been here for a while, I'm a firm believer that we're going to see new all-time highs in the market in 2023. So let's say that hypothesis is correct. We can do what's called a trend-based fib extension. This was just a wave 1 movement in an Elliott wave. Wave 3s are the largest waves, okay? Quant has not seen its wave 3 movement yet. So it should theoretically see its largest price appreciation in this third wave. So what we can do is a trend-based fib extension. We can come all the way to the bottom. This isn't going to be exact. I'm doing this on the spot. All the way from the bottom here to all the way to the top of our wave movement, and then come all the way down to where we corrected. Now what I would do, we have all these Fibonacci extensions, right? We have everything from the 1.618 all the way up to 9, which we can ignore. What I would target in based on a lot of charts that I've looked at, especially given that this is a wave 3 movement, this is my golden box. If I was selling, what I would be targeting is the 3 to 5.618, okay? Now, if you want to be a little bit more conservative, you could scale out at 700 or 1100. $1,000 is a psychological level. But ultimately, where I see prices wicking up to would be in this orange zone in here between 1,500 and 2,300. I know that's a long ways away, and that seems nearly impossible, perhaps. Keep in mind, we topped out at 450, all right? Was it 450? No, I'm sorry, 430, okay? So all the way last year, we topped out at 430. So for this thing to do a 4 or 5x over its prior price level is not, it's par for the course based on a lot of other crypto projects of what they've done. So just for fun, if I was targeting a range, I'd say somewhere between the $1,500 and $2,300 range. Being more conservative, I would target more of the $1,100 to $700 range, okay? So I hope you found this video helpful. If you did, make sure to share it with at least one person. Click the thumbs up button, subscribe to the channel, click the little bell icon for notifications, drop me a comment, and until next time, spread awareness and carry the education forward.
So what you gonna do, $5 on CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild on you?